Where are the hotspot suburbs across Australia? In property investing, about 80% of the heavy lifting is done in the location that you choose. If you choose a wrong location, you could be stuck with a dud property. But if you choose the right location, you could actually get the growth from day one, year 5, and really kick off your property investing journey with success. But with thousands of suburbs across the country, there's over 15,000 suburbs. How do you actually identify where are the hotspots? Where should I actually buy properties so I can maximize my potential and avoid a costly mistake? And there's so many people out there saying buy here, buy there. But what is the actual facts and information that you need to know to help decide whether that location is right for you, whether it is a hotspot, and whether you're actually going to get growth with your property? Because as a rentvestor, you really can't just guess this stuff and really shouldn't be buying just in your backyard because you know that area. You really have to be strategic because otherwise you could fall behind. And you really need to buy where you can actually put your money to work the hardest. In today's episode, we're going to spot how can you actually avoid buying in a location that just doesn't make sense. And I'm guilty for making mistakes back 15 years ago. And how do you choose a location that's going to do well? And not just do well, but really outperform the Australian average. You're going to learn about the data points that you need to look out for, the hype that you need to avoid. And we're also going to talk about where some of the next generation of rentvestors are looking right now. I'm Steve Williams, and on this podcast, we talk all things rentvesting, property, and getting ahead. I've been a rentvestor for 15 years. I started my journey when I was living in Melbourne, and I bought my first investment property in Canberra because that's where I could afford. And I've since gone on to build a property portfolio from there. And as the founder of W Property Advisory, we've helped people across the country get into the property market so they can get their foot in the door and start getting ahead. In today's episode, we're going to unpack what is a hotspot suburb and how do you identify them? We're going to talk about the data points that you need to look out for to identify locations that are worth buying in and that you should definitely avoid. And I'm also going to talk about some of the locations that rentvestors have been buying in that have been performing really, really well and what you could do in the future to see this trend potentially occurring again. But real quick, I put together a free quiz. You can click the link below in the comments. It takes just 2 minutes. And if you want to see whether property investing is right for you and find out where you're at in your journey and whether you're ready to take the leap, click the link below, complete the survey, and it's going to give you actual insight into what you can do step by step to get yourself ready and get you on the journey. All right, so let's dive in. What is a hotspot suburb? You hear this in the headlines all the time. People are always asking, where's the next hotspot? And often there's a conflict in what this actually means. A lot of people think it's about buying in a trendy area. And I've been burnt by this in the past. When I was living in Melbourne, the second property I purchased in a trendy area called St Kilda. And you think, okay, great. It's by the beach. It's a good location. It's got lots of potential. And all the locals thought it's up and coming. It's gentrifying. But the reality was the property that I bought did no good for 10 years. I really barely scraped to cover the cost and actually made an overall loss on the property. But if I had chose wisely, I could have done much, much better. So it's not just buying in a trendy suburb. It may not be in your city. It may be interstate. It could be the other side of the country. So that's why understanding how do you actually identify hotspots means you can actually work out what's not going to work and what is potentially going to work. So at the time when I was buying in St Kilda, what I saw was the actual features of the location, but I didn't look at the data. And back then it was a lot harder to get access to the data. There was really no websites around where you could get reliable data back then. And I didn't even know that it existed. And you hear the sales agents and they're like, oh, look, great location, great opportunity. We'll get tenants in it, no worries. But there's actually a way more to it than that. So hotspot suburbs are essentially when there's a high level of demand from buyers and there's a low level of supply and essentially prices are increasing. So just to really paint the picture, one of the hotspots for 2024 and 2023 was Perth. And we bought lots of properties for clients in Perth. And why this was a hotspot was firstly at the macro level, the economy was doing really, really well. Population was growing and on the ground, the issues were the fact that there was not many houses for sale. Houses were selling quicker. There was also very low vacancy rates, and it meant that there wasn't many properties for tenants to actually rent. So investors saw this as an opportunity. So investors flocked there. Local buyers were trying to buy a home. So essentially there was all this competition created. And there was inspections that we were going to where there was like 20, 30, 50 people at these inspections. And often properties were getting anywhere from 5 to 15 offers. In fact, I remember going to this one property, it had 43 offers on this property, which is absolutely absurd. So if you think about the dynamic of that situation, there's only one house for sale, right? And if you've got 5, 10, 15 people trying to buy it, then essentially there's going to be 4 people, 9 people, 14 people that actually miss out on that. And then they get disappointed, then they come back with a vengeance, and then they bid more, and then essentially the next house is going to sell for more. And in this sort of a situation, we saw prices, they're growing by like $5,000, $10,000, $15,000 a month, which is just absurd. And it then creates that, I guess, panic situation where prices go up. Now, these situations that we saw over in Perth were, I guess, quite rare. And there's no real other location that we're seeing right now where the dynamics are the same, where there's huge population growth, largely driven by international migration, but also the fact that there's incredibly low supply. Firstly, with houses for sale, but also houses being constructed. So people were panicking and they were just wanting to get into the market. That is really the pinnacle of a hotspot location because there's just so much demand and not enough supply. And naturally, because of that, prices were increasing. The other fact as well, because of that, then other people told other people, hey, the prices are going crazy, you have to get into the market. So then the sheep follow, and then everyone's trying to get in at the same time. And then eventually when prices sort of reach a point where they're unaffordable for the local people or they no longer see value, the market starts to slow down. There's still growth occurring, but the growth rates go from around 20 to 25% a year down to a normal sort of 5 to 10, maybe 15% per year, but it starts to decrease in terms of the rates that prices are growing. So that's really the pinnacle of a hotspot suburb. I mean, ideally we want to get into a location before we see prices starting to skyrocket, or at least get in there as early as we can, because it means we can capture as much growth as possible and then not miss out on the boat and then essentially be stuck with a property that's going to be stagnant for years. So when I bought my first property as a rentvestor, I was living in Melbourne, couldn't afford to buy a house there, so I bought a house in Canberra. And as I said before, data back 15 years ago was a lot harder to come by, and I made the decision based on the fact that I knew Canberra because I'm originally from Canberra. And I didn't look at the data, but I just saw that Canberra's a great place to live and there's people with jobs there and there's people wanting to rent it. Let's go buy it. Now, I don't regret that decision because it ended up doing really, really well because I caught a cycle in around the 6 to 8 year mark. But definitely for the first 5 years, I was forking about $200 per week, maybe $300 per week to hold the property, and the prices remained fairly static. But then I caught that growth and the prices went up quite a bit. So they were back then about 500,000 and they went up to about 900,000, even $1 million for that same property. So this is what a hotspot suburb is. Essentially, it just means that there's a lot of people trying to buy and there's not much stock available, and essentially prices are on the upward trajectory. And the opposite of a hotspot is I guess a dud location. So essentially, if that's not occurring, if there's no buyers around, if there's a huge amount of supply, and if houses are just taking forever to sell, it's not probably the place to buy right now. You may capture that growth in sort of 3, 4, 5 years. So it really depends on what your individual goals are. If you're happy to buy a property and just hold on to it and then wait for the growth down the track, that's perfectly fine. But if your goal is to be a little bit more aggressive, getting the growth as early as possible, then you really need to look at the data and identify hotspots early so you can get that growth occurring early on. And the reason why I say this, why you need to get growth right, is because if you are wanting to be a rentvestor, well, the intention of doing this is to start building your wealth and getting ahead. So if you buy in a location where it's really slow, then it's really not going to serve its purpose. But if you buy in a location that's actually growing, you can build your net worth, create some equity, which is then going to give you some freedom and opportunities for what you want to do next, whether it's buy another property or refinance and pay something else off or something that's important to you. Now we've got an overview of what a hotspot suburb is. I now want to dive in and talk about how do you actually identify them from a data point of view. You hear all the time data-driven, data-based decisions, etc., etc. It's a bit of a hype at the moment, and definitely there's a lot more tools now where we can use the data to identify suburbs that have the best potential. And I'm a big advocate for data. However, I really want to give you this warning that you really need to understand where's the data coming from, how old is it, and you also need to sense check across other data sources because it's not always accurate. It can be out of date and it may actually not paint the picture you're wanting to understand or tell. So for example, some of the data that we get access to, we've noticed that even though it says that the vacancy rates are really, really low, and just to explain what a vacancy rate is, it essentially means how many properties are actually vacant and available to lease. So anything less than 2% means that there's not much to rent. Anything less than 1% means it's almost a dire situation and there's a lot of tenants applying for properties and prices in rent are actually going up because of that. So essentially we want to just fact check that because just because a vacancy rate is less than 1% doesn't mean you're going to get tenants quick. I recently went to Frankston in Victoria and the vacancy rates were sitting at around 0.8%. Now, when I spoke to property managers, they were saying it was taking about 3 to 4 weeks to actually find tenants. So even though vacancy rates were low, it was still taking time to get tenants. So you really need to sense check the data. The other thing as well is data is backwards, right? It's historical. It's not what's going on right now. And these systems and portals and websites that get the data, there is a bit of a lag time. And certainly in a growing market, for example, Perth, the median house prices were vastly different to what houses were selling for. That's why I recommend don't necessarily pay too much attention to the median house prices. Use it as a guide to help you understand like where somewhere I could potentially afford, but you really need to look at the recent sales and the houses that are actually for sale right now to understand what the average going rate is for a 3-bedroom, 1-bathroom or a 4-bedroom, 2-bathroom, for example. But the beauty of data is that we can look across all of the 15,000 suburbs across the country. We can look at a suburb level, a council level, and we can also look at more of the macro level, like what's going on in the states, which is actually driving house price growth. Property essentially is a game of supply and demand, and that's really economics, right? When there's not enough and there's a lot of demand, that's when prices are going up. So when we're looking to identify a hotspot suburb in a location we want to buy, we want to check that there is demand. We want to see that there's buyers around, or ideally that the number of buyers is actually increasing. That's the first point in demand. We can also look at some of the data around like how many people are searching in an area. Some of the online platforms you can actually see, like realestate.com.au, you can see what the demand is from buyers in that location. So if it's high demand or it's actually increasing, that's a good sign. We also want to see that houses are selling reasonably quick. So if it's selling like 50, 60 days, that means that it's a very slow market. But if you're at sort of 20 to 30 days in the time it takes to sell a house, and ideally it's decreasing, that means that there's demand and people are wanting to buy houses right now. We also want to look at the vacancy rates. As I said, when you buy the property, if tenants move into it, you want to see that there's going to be demand from tenants. So if it's anything less than 1 or 2%, that's sort of ideal. Anything more than 2%, you might have problems finding tenants to move into your property. That's really from the demand side, and that's just a few of the data points you can look at a suburb level. You can also look at the statistics from more of a broader point of view. So for example, population growth, the data comes out from the ABS. It can sometimes be a little bit out of date by the time you see it. But for example, we've seen that WA has had the strongest population growth. The most recent data, the state grew by 2.8%. And then second, just ahead of Victoria at 2.1%. And the other states were hovering around in the ones to high ones. And so it means that there's a lot of demand in people moving to WA. And that's naturally creating demand on housing, which also contributed to the prices growing through that 2022 to 2024 and even in 2025 as well. They're the demand side factors. Now we want to look at supply. And there's a few factors we want to look at. So how many properties are available for sale, right? We can look at the market absorption percentage, which is basically how fast are the properties clearing out? Are they being sold, or are they just sitting there and there's just heaps of supply on the market? That's one point you want to look at. You want to look at also building approvals as well, especially if you're buying in a newer estate. For example, if you're buying on the outskirts of the city, you just want to check that the building approvals is not too high. In some of the newer estates, you can see that the building approvals is like 20 to 80%, which means that there's going to be a ton more properties coming up, firstly for sale, but also for rent as well. So it could then affect your vacancy rates and also your rental amounts. So you really want to avoid locations where there's a huge amount of building approvals, not just in the suburb, but in that region, because that's going to compete with your property. And the thing is if your property is like 5-10 years old and they're building all these nice, new, clean, shiny houses that pretty much most of them are cookie cutter these days, the old 3x2s, 4x2s, then it could mean that you've got competition for firstly finding tenants, but if you go to sell it, your property is going to be a dime a dozen. So you want to buy in a location where building approvals are low. As I talked about before, the number of properties on the market is also a factor in supply that you want to consider. And I'm going to go back to Perth again because everyone was talking about Perth in the last few years. But essentially, a sort of a balanced market in a city like Perth, it's a population of over 2 million. There's about 12,000 houses for sale. That's kind of like an average over the years. But we were seeing that the number of properties for sale was falling down to like 3,000 to 4,000 properties, which is tiny when you consider how many people live there. And naturally, it meant that there wasn't much to buy. So when something come up for sale, people would be jumping at it, regardless of if it was in poor condition, on a busy road, or in not a great location. People were desperate. We also want to look at the affordability, right? And affordability is around how can the local people pay the rent with their incomes. And essentially, you want to just make sure that the property prices aren't too high in comparison to the wages in that area. And you can access this data from the ABS in terms of the median household incomes in a location. But you also want to look at the prices in comparison to that. And there are some ratios, and this is getting a little bit more complex, but you can also just like look at a suburb and think, okay, the property prices are going from $700,000 to $900,000. Is that affordable for the average person that lives in that suburb? And if it's becoming more unaffordable, then it's going to mean that people are stretched, and it could mean that prices essentially reach a ceiling because people can no longer afford to buy in that area. But it could mean that people are then outpriced from other suburbs and then move into this suburb, which means that there's more money in the location and it could potentially gentrify that suburb. We've talked about the data, and there's also other factors contributing from an economic perspective. We want to look at infrastructure as well. And whenever there's an infrastructure spend, usually when it's kind of announced that it's going to occur, and also in the construction phase as well, because there's a lot of jobs being created. There's people that are attracted. Maybe there's a new train station going in, public transport, sport facilities, creation of jobs. All of these factors are going to create demand in that area. And I recently heard a story of how a principal from a high school moved from a really popular school to one of the outskirts high schools. And as a result, people are just like flocking to this suburb. So factors like that are going to create demand and also cause prices to increase. From an economic perspective, we also want to look at what's the economy doing in the area. Some economies, they just kind of ticking along. And if you look at the Victorian economy, it's been struggling a little bit because the government is pretty broke. And so the creation of new jobs is actually pretty low. And this is also going to have an effect on the housing market. But if you buy in a location where the government's spending a lot of money, they're building new infrastructure, there's new jobs being created, unemployment is being low, and that's also going to help contribute to the property being a hotspot. We also want to look at social changes or sort of big picture things. And I want to give you this example of COVID. During COVID, a lot of people lived in, or prior to COVID, a lot of people lived in the city, and they would commute into work in the city at their office and then head back home. But during COVID, everything kind of changed and remote working became more of a thing, and people could actually choose to live wherever they wanted. And a lot of locations where there was a great lifestyle and were reasonably affordable, people from the cities could actually move out to these locations, have a larger property, be closer to the beach, or have that lifestyle they desire and still earn the income they could get from working their job that was normally based in the city. And this created an influx. And we saw these in some of the regional locations outside our major capital cities. So the central coast of New South Wales, the south coast of New South Wales, but also Queensland. A lot of people who had jobs from down south migrated up to Queensland and they're working remotely. Although that is also now changing, and there's talks that a lot of companies are requiring employees to go back to the cities. There was even a potential threat that the federal government may require all federal government employees to work back at the office. And so you need to think about how could that impact house prices? And I recently spoke to someone, they wanted to buy on the south coast in New South Wales. And then with these talks that potentially all the federal government employees might need to go back to Canberra, this could create an exodus of people needing to move back from the south coast to Canberra to work in the offices there. So you need to think about what are the potential larger scale changes occurring that could impact on house prices in a region. I've just covered really the tip of the iceberg when it comes to data. There's tons of other data points. Some of it's helpful, some of it's not so helpful, but it's really about using that data to paint a picture. And I'm a really strong believer that there's no real algorithm or anything where you can just mesh this in together and give you a single location to buy. It's just not possible because property is complex. There's so many different factors going on, and it also depends on what your goals are, because whether you're wanting to chase growth now or yield now or cash flow, whatever it is, you need to identify like, how is that suburb going to help you achieve your goal? All right, so I've given you a really brief introduction into the data, and we're going to cover a lot more of this in future episodes, but I just want to give you a bit of a taste for how we find hotspot suburbs. But now let's talk about where are the actual hotspot suburbs? Where are people buying right now? Where are investors flocking to? And I just want to be really careful because, as I said before, everyone's goals are different. And I could tell you to go buy in one suburb, but it may not necessarily give you the results that you're looking for. So hopefully you use the information I've provided to get a bit more clarity, and certainly avoid buying places. I see tons of investors buying in their backyard. And when I say that, the next suburb next door, because they know it. My brother-in-law the other day, I'm not sure if he's listening, but he was saying, oh, buying this suburb because they're cleaning all the crime up. But the other factors with the data, they don't stack up. So really it's not a good buy. So please use this to not make a mistake, but ultimately choose the right suburb for you. Where are people buying? All right, now the hotspots over the last few years, Perth went bonkers because all of those points that I spoke about, they were all really, really strong. And the market is still performing really well over there. Price growth is occurring, definitely not to the point that it was last year, but it's still reasonably affordable based on the incomes people have there. The rental yields are still decent. I mean, it's a great city to live and also a great lifestyle. So as a capital city, Perth's been doing really, really well, but it might be towards the end of what we would call the hotspot. And people will still get growth there, but it may not be right for you with your goals. The other point to consider is what you're going to do with the property and how long you're going to hold it for, whether you want to renovate it, create manufactured equity in it. So these things as well is going to help create growth in your property without needing to rely as much on what the market is doing. But from my perspective, I still see there's value in Perth as long as you buy strategically and avoid where there's high supply and really focus on where the demand is, both from the renter's perspective and where the buyers are looking right now and what's appealing to the owner occupiers as well. There's also a lot of talk about Melbourne, and Melbourne is a totally different kettle of fish to Perth. The vacancy rates are a little bit higher. The economy is not as strong. Population growth is not as strong. The overall quality of life in some of the fringe suburbs, in my opinion, is not anything in comparison to Perth. Now, I think Melbourne is a fantastic city and there's a lot of things going for it. The fact that it's been in the doldrums for many, many years, there's been quite stagnant property prices. The economy's been really in a lull. So if you're going to buy there now, you're going to catch it early in a cycle. And then over the next few years, as its popularity increases again and people get confident and people move there and the economy gets back on its feet, then we're going to see that things start to shift. So if you're wanting to get in early in the early stages, then Melbourne could be the right place to go. And it also depends on what your budget is, right? Because Melbourne, for the average property you get in Melbourne, it is a little bit dearer than what you would find something in Perth. So the other thing is, like, we don't just have our capital cities, right? We've got all of our regional locations, and some investors have done really, really well in regional locations. Over the last couple of years, places like Townsville, places like Mackay, Rockhampton have performed really strong as well. However, there's factors you need to consider, like insurance costs and higher council fees. Even though the yields are decent, you need to just factor in that your costs are also quite high there. And then also, as I said before, you need to check whether as the prices grow, can the local people actually afford to live there, and will they continue to buy it once the investors leave that area? That's something that you want to keep an eye on. So, all right, Steve, you've given us tons of information and I'm a bit confused. Where should I actually buy it? Well, the thing is, you need to get really clear on what your buy is, and then what your risk tolerance is, and then what your budget is, because those are going to stipulate where you should buy. And I could, as I said, could tell you to go buy in this suburb, but it may not necessarily suit your situation, and I don't want to disappoint you. So please use this data and put it into play. And if you have any questions around anything that I've talked about today, pop it in the comments below, and love to hear from you. I do reply to the comments, so please pop it in below. Love to be able to assist. All right, and finally, where do I access this data? I want to give you a bit of an overview of some of the data sources you can find. Now, if you're wanting to pay for the data, there's a range of tools out there. You've got suburbsfinder.com.au. There's the hotspotting reports from Terry Ryder, which give a really good overview of all of the regions and all the locations, both from a data perspective, but also from an infrastructure perspective as well. You've got HTag. You've also got some free tools online. So you've got microburbs, you've got the ABS, you've got realestate.com.au, you've got domain. And if you just even Google and find out what data you can get access to. But as I said, always make sure you sense check it, because it might be out of date. It might not be reliable. Another thing is, you can always talk to real estate agents in the local area to get a little bit of a feel for what's going on. Or if you need a buyer's agent, reach out to us or find a buyer's agent that works for your situation, because they'll have a good idea of firstly how to interpret the data, but then also like what's actually going on the ground in those locations. Today we've covered what is a hotspot, what is a not spot, how do you actually identify the suburbs using the data, and also general information that you can access online. And then where are some of the locations that investors are buying at the moment? Again, pop your comments below if you've got any questions. Love to be able to support you on your journey. Until next time, let's rentvest and get ahead together. All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs, and speak to a professional.